Yo, what's good, people? It's your boy, Professor Pippins, yet again, another weekly analysis. Just wanted to go through a few charts that I'll be looking through this week, expecting some moves from. I got a few of them already marked up: DXY, GJ, GU, AU, and then I want to go through AUD, JPY, AUD, CAD, CAD, JPY, UJ, and then UCAD. I don't know for the dollar. Looking at back what we did last week. Last week started off on the 5th. So last week and the week before. Last week and the week before, we had bullish structure, bullish pressure, bullish behavior, bullish sentiment. We had a break of structure of the previous lower high. Look at the daily chart. Right now, I think I look at this as more or less a retracement. This bearish structure is going to hold up as far as, looking this far back in time and price action. If this is going to continue bearish, then we definitely have to close below this level at 77.82. But within that time frame between 82 and 77 level, there definitely should be plenty of opportunities to take advantage of the market, and then potentially look for some either look for scalp shorts back into these levels down here. I got identified back into the 80 level, 80 flat level, and then even as low as 79 level. So current price action is ranging in between 81 and 80. So you definitely have to go down to your lower time frame and just see how price action reacts, see what it does coming to this afternoon. Just seeing how it opens up, how it respects. If it stays and bounces around in this range, like it's going to push up. Just look for those reactions. Look for it to come back to some of these key levels, and just see what it does for you. The way this price action look, I would be more happy looking for buys and sales, just because all of this is uptrending. Yeah, coming back down, we did break some structural levels looking left. As far as higher highs and higher lows, I feel like this closed below that previous higher low. And if not, this wasn't your higher low, we definitely closed below that one. So definitely just want to watch how it retraces and how it comes back down. And even if you want to put your fibs on it, 50% of this entire move is even back down here at the 79 level. So just want to watch it, pay attention to it, see what price action gives you, and then take advantage from there. Going into GJ, have this one drawn up as well. Identify some higher highs and higher lows from the higher time frames on the 4H. Hide all the analysis. Price action previously, we were bullish, then started to consolidate, and then just started to range between this 153 level and this 149 level. So this potentially could continue and break out bullish and continue this bullish uptrend, but for right now, we're just stuck in between that range. We just want to see what price action is going to give us in order to potentially to create some setups and potentially get into the market and take advantage of it. And add the analysis back to it. Had this supply zone marked up here simply because we pushed into it, and then from the reaction from it, it kicked out 65 pips. So if you were looking at this level to be retested, once price action pulled into that level and then started to exhaust, you definitely could have took a short from here, looking at the lower time frames. So what I'm looking at from here is we're still creating higher highs and higher lows. So definitely watching the trend for definitely looking for bullish continuation in the 4H pattern, making higher highs and higher lows. What I got here is the 1 hour setup. Wait to see how price action open, either to push up to 152, 300, which would be somewhere up in this level for a double top, or break bearish for double bottom at 151, 800 level. So somewhere down in here. So like I said, same thing with the DXY. If the DXY is going to continue, what are we looking at? Yeah, if the DXY is going to continue bullish. Why did this come up? Did we look this already? Yeah, I think I did. But yeah. What was the first one I had for? I can't remember. I have to go back. But either way, GJ, I would expect buys, but what I would look for before I got into those buys was price to hold up this resistance level at 151, 800. If it doesn't and it breaks below, then I would definitely want to wait to see if either it's going to consolidate between these two ranges or if it's going to break below and have continuation sales from this level and potentially come back to, let me see, go back to the point. Yeah, this is the only untested level down here marked with this 4H order block. So that would be a lot of time before price made it all the way back down to that level. So definitely I'm waiting for the buys on GJ, but if it comes up in here and spells out and show me what I'm looking for, I'll definitely take the sales back down into this 151,800 level. Let's see, GU. Back on the 4H time frame, higher time frames are pushing bullish. We did react from this demand zone back in August and just been putting out higher highs and higher lows since then. What I do know is about this structure and this this trend is we did push up and create a high and it came back to this resistance level where price created in the past and somewhat of a double bottom. I mean, depending on how you look at the price action, but once we did this retracement phase and we came back out of it bullish, we did not create new highs. So for me, that kind of opens up my eyes to say, okay, well, if we hit a lower time frame demand level or support and resistance level and we went back higher, what caused us not to be able to create new highs? Why did price action stall out right there? And for me, that means once price action opens back up for a new week, I would want to wait and see if we're going to respect this level we currently start out at before or to create new highs, or if we're going to break below, retest and then have shorts back into this level. So definitely waiting for that GJ possible or GU possible sales below 38,250 level back into the highs of 38,890 level. And then once we if we get above here, we're looking for breaking the retest levels back into these highs at 39,800. Trend is currently bullish, so definitely looking for the buys. Could get a double bottom off this level here and then continue to push up. Next, I got AUD USD drawn up, and basically this one kind of just like GU, as far as price action being bullish and then having this retracement phase, stalling out, not making new highs. This is your double top back over here. So it's kind of, the structure is kind of different, but still the same bullish momentum / retracement here. We're looking at this though, this seems a little bit more bearish than bullish. And the reason for it is we pushed up, we retraced, and then we started back pushing higher and did not create more highs. And then we started back dropping lower. So with this, I would expect price action to break through this level and come back down to this 72,950 level, 930 level, and then probably take buys from there. If not, if this level doesn't hold, I'll look for a break and retest below that level, 72,840, and then continuation back and down into that demand zone. Looking at the higher time frames, we did have a break of structure of this last lower high when we pushed up. So based off of the candles, it looked like we possibly could drop, but based off of the structure and sentiment of what the market is doing, we definitely want to see if this level holds or if this level holds to potentially give us buys to retest this next structural level up here on the higher time frames. And then on to AUD JPY, pretty much the same thing. We had a break of structure of the previous week's lower high, giving you a new high right here. So I would look at this as more of a retracement phase of this leg here to see how far this potentially could come back down. And then, I already got the fibs drawn out here. Yeah, right there. So I would look for a resistance to either hold up here or here before taking buys back to the top. And that's on the daily time frame. So coming down to the smaller time frames, you do have how big this range is. You got a 71 pip range to that level, and even further is 131 pips. So potentially if the market sets up for you, definitely could catch some trades in between these two zones. Or you could just wait and say, okay, I'm looking for buys from this level, or I'm looking for buys from this level to go back and give me new highs. Or if the market just flushes through all those levels and then come back and retest, it could turn into a bearish market. And then you just have to get in from that way. It's always a little bit more difficult to say what's going to be your necessary buy, simply because the market's not moving. It's just sitting still. if this market was moving, I can see if it was failing to break this level or if it was actually breaking through this level currently. I can be more definitive of what I was looking for. But because of the previous sentiment / price action with bullish, what looks like a correction phase, it's kind of in the middle right now. You definitely don't want to trade when price action is in the middle because it can do anything. It can wick up, wick down, take off stop losses above, take off stop losses below before going in the true direction and showing you where it's truly wanting to go. So definitely just keep an eye out for that. I would say don't be so glued to one type of setup to say, okay, well, this is going down, so I'm only going to look for sales, or this is going to come down, I'm only going to look for buys from this level. Definitely have a way to where you can take advantage of the market both directions based off of the candle setup that it's giving you. Don't just have a one-way street to say, okay, well, because we were bullish back here, I'm going to continue to look for buys and only buys, when clearly this right here is stepping down as far as price action. So definitely keep that in mind. Keep an eye out for that. I will try to do the weekly recap of the trades I take between tonight and tomorrow, going into Tuesday morning, and just see, how these levels have played out, held up, rejected, created a support, giving us bounces from these levels or breakthroughs of these levels, and see where price action wants to go. I don't think I had a chance to mark up AUD CAD really yet, so what I'll do is mark it up real quick. And just looking at previous price action, just starting off from what's where we are currently in the market. What I do see is we had a low, or we had a high, potentially pushing lower below this low. And then once price action pulled back, it actually closed above this previous respected lower high. So I would now consider this to now be a bullish market since we closed above that level. And what I would look for would be to mark up my zones based off of on the daily, based off of the previous high and the previous low. And so doing that, it allows me to create a range for my lower time frame to see which direction or where I could potentially execute a trade and take advantage of the market that way and get busy and catch a few pips. I don't really like this price action right here because of all the wicks. Continuation, drop down here. And this bearish continuation can play out a few different ways because I know this is my ultimate daily time frame low. That could potentially be my bearish continuation zone. But what happens is within this leg of price action, when you go down, especially to your 4 hour, you'll start to see that there were several higher highs and higher lows that the market could potentially react from on its way back down. So we'll bring this up here. And then what I'm saying is, so you got a high, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low. So the market could potentially stall out, and find resistance because we're in an uptrend. And find resistance on any of these levels could potentially push the market, higher. So what I really would pay attention to with this is let me see what my tool is. See if price action is going to continue to, just give you that price action back into this level and then shoot for the highs, or if we're going to, come down, break that level, retest that level, and then come back to this level and give you resistance back into the highs. What we have to remember is this was the low on the daily, and this was the high of the daily. So we have all this range, to potentially retrace and correct, and then look for continuation to the highs or continuation back to the upside. And even the 50% of this leg is somewhere down in the middle between here. So price action it can always do what it wants to do, but it's best to have a plan to react off of what it shows you versus trying to, say, okay, well, price is going to stop right here, definitely, or it's going to stop at the 50%, or it's going to stop at like the 70%. You never really know that until you see the price. The candles giving you, those type of setups, those type of ideas, those type of strategies to run up on. So with AUD-CAD, definitely wait to see how we're going to react. If we come back here, definitely buy from up here. If we break below, close below, retest that level, potential shorts back into this 91,928 level, and then you just go from there. CAD JPY did have some pretty good sales from this last week, all the way down. We did not hit the TP5. We made all the way to TP4. So I can pull that up. Let me see. Okay, so I did not drop what we actually got in at, but this was the previous part. We had sales below this level, and price action, as you can see, has come all the way down. Let me see what we at, all the way down to 86,567. So pick the sales as it came below this level, retested on the smaller time frames, and all the way back down to 86. So somewhere down in this level down here. Looking at it now, let's see what we have for our daily highs and lows. So what we have here is high, pretty much low, lower high, lower low, pretty much equal highs. And then this one didn't really close below, but on the lower time frame, you're definitely going to see it close below. So what I would say is this is my low, and this is my new, this is not created. So I would take it from this one as the lower high being respected, simply because this lower high hasn't created a new lower low. And we don't know if it's going to, but if it does, then this will be your new lower high, then your lower lows, whatever it creates this week in the weeks going forward. So what I would do is mark up this level as my high on the daily chart, and then my low. With these wicks been like this, I would have to fix this on the lower time frames, because I usually mark from the most wicks to a little bit past the liquidity grab. So now looking at this, I would just bring this down here. This would be my bullish continuation zone, bearish continuation zone, and then current price action is here. So what I normally like to do is mark up the bullish continuation and show me how much range I have from the top and bottom of those lows and highs, and then I go in and actually outline where price action is actually trading at the current moment, and then look to see how it breaks out, how it reacts from those levels, how it potentially I could have sales. Potentially I could have sales from this level all the way back into these lows, or I could have buys, which would be a little bit more risky because there's a resistance here and the next resistance is really close. But I still think, yeah, that's still an 85 pip range you can take advantage of. And definitely find a setup within, in between those zones. So just marked up here. Bullish continuation, and you got the bearish continuation down here. So based off of this, I would be looking at this intraday time price action. We did have a close above the previous lower high that gave us the new lows. So looking at this, I want to see how price action is going to respect these lows. If it's going to break through, come back and retest this level and fall out, or it's going to start producing candles like this with these long wicks, long shadows, and then start to go back up to the upside. Now, if we come back up here and get the same thing, then this would just turn into a range. If price could just, bounce back and forth in between those two levels before making this move back up to the upside or back to the downside. But right now, like I said, with it being the weekend, is all a waiting game. You have to see what price action sets up and shows you. Even coming down to a 1 hour, yeah, you could potentially, if you know how to trade inside the range, potentially go ahead and start setting up for buys, because we are back down into that level where price, took off and went back bullish from before. But to play it safe, I would rather see the candles give me that setup. Start slowing down the big candle, small candle, small candle, small candle with a long wick, and then that bullish print of the bullish candle showing that the bulls are back into the market and they're potentially ready to take control, of price action. But looking at these, price action always gives you the opportunity to get in and get out. You don't necessarily have to rush into it and say, okay, well, as soon as this candle touches that zone, I'm in. 9 times out of 10, from my perspective, usually when I get in, when it first touches on, I usually get stopped out because what'll happen is price will push into that zone and give you a reaction. And the first thing I usually want to do is put stops at break even and put stops in profit. And it usually always comes back to retest not once, but not twice, and even sometimes 3 times before continuing back up to those higher levels. So definitely just something to keep your eye out for. Definitely have potential sales, continuation sales below this level, and then not as big of a range to the top side, but it's definitely a range where you could, stall out 90 something pips, and get busy that way. But, there's a bigger range to the downside, 173 pips. So let's keep an eye out. That's definitely what I'll be doing. Waiting to see how we act up in this area right here. If we break through and close below and continue and then retest a little bit, I'll definitely be looking to take shorts off of that retest. Or if it stalls out, starts consolidating right here, I'll definitely be looking to take advantage back to the upside. UJ, let's see, higher time frames, still consolidating, man. It's hard to make a prediction on the consolidated market simply because, yeah, it did enter this consolidation in a bullish manner, but at the same time, yeah, there is no guarantees. Unless you know how to trade in the range, yeah, don't get clapped in the range. And all this right here just looks like a big, 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 massive consolidation on me. So if you know how to get in, if you know how to trade the range, you can get in potentially, but there are no guarantees when it comes to this. This is not trending. There's no possible. There is a possible setup, which is trading in the range, but outside of that, it's just like, is this going to go up? Is this going to go down? Is there bearish momentum? Is there bullish momentum? All I see is impulse moves up with correction moves down. This could be the next impulse move up and it could possibly correct back down. So you just have to play it that way and continue to watch if you like to trade UJ. I usually don't like to trade UJ because the ranges are a lot smaller. Yeah, potentially look big, but when you mark, from the top to where price action, that's only 48 pips compared to that CAD JPY we just looked at. That was, 130, 140 something pip range. So I prefer to go with a market that's going to give me a bigger opportunity to get in and take advantage and make more money that way than, try to struggle out, and it's consolidating. The last one I got is USD CAD. I know I'm making it through these kind of quickly. I'm kind of late on getting this out, and the football game just came on, so yeah, I gotta go watch my Bears. Get busy, but previously on this USD CAD, I had several double bottoms marked out. What I see on this market right now is we had a high with a low, potential lower high. It did give us a lower low. And then we pushed back and stalled out at that lower high area. So we did push through it, but we didn't close above it. So we are respecting that lower high area because of how these wicks are. I would have to mark this up like this and then see how it looks on the smaller time frames. To that 4 hour. So then I would adjust this to down here because mentally I know that this here is nothing but a liquidity grab or a potential fake out. But people who are watching this market live, they saw this big bull candle, then it pulled back, then they saw this bearish candle, then they saw the next candle push down, then push all the way up. 9 times out of 10, when I see candles play out like this, it's usually from some type of news event. And I didn't trade much past Wednesday of last week, so I don't have a clue of what news events came out. I don't too much depend on news. I know if it's big news events, I try to stay away unless I have a real good idea that something like this is going to play out. But other than that, I usually try to stay away from the news events. This would be our daily range. So the bullish continuation zone will be there. The bearish continuation zone will be there. And then from that point, you just look and see what type of range you got to play with. You got a high, low, lower, you got low, you got a high, higher, low, higher, high, higher, low, higher, high, higher, low, potentially higher, high if you don't count, if you're not looking at that wick. Then coming back down, we start to break structure, looking left, lower, low, lower, high, lower, low, with a breaking structure back to the upside. So This right here is kind of tricky. I would wait to see how much this move retraces. And if it stalls out at something like a 50% level on your lower time frames, then I would definitely take advantage of the buys. Marked up properly here in 1 hour. So I'll look at it two ways. I'll look to see how the candles, how they print once they get back to this 50% level. If it doesn't look pretty, I'll wait for it to come all the way back down to origination point and see what type of reaction we're getting from here or from right here, and then just see to determine whether we can take buys back to the upside, back to these highs, or even create, you know, potential new highs looking left, which is way up there. So that's my weekly outlook, my forecast for the week. Like I said, Wednesday, I will be back with the follow-ups of the trades that I have taken so far from tonight, tomorrow into Tuesday, and drop that video for you guys. And like I say always, this is what I got. If you'd like to reach out, get in touch, trade together, link up, ask questions. These are my social media tags. This is where I can be reached. That's all that I pretty much got for this one. Welcome to the U.